The global supply chain is broken. We've seen consistent problems in terms of consistency over the past 2 years. The word logistics has come up in the news now more than ever, and we don't have fluidity throughout from start to finish, basically from manufacturing the goods, getting those products onto the shelves. And we're starting to see a similar pattern form in Asia. So we'll be discussing in this video how we got here today, discussing if this is potentially peak globalization, and we'll be discussing what the current trend in Shanghai is as of right now and what companies are doing to kind of stock shelves to be ready for Christmas. But if this is your first time here, my name's Nick. Welcome to Ways to Wealth. Before we get into the video, huge favor, huge ask. If you learn something new or you get some value out of the video, hit that like button for me. I definitely appreciate that. And if you haven't already, please consider hitting that subscribe button and turning that notification bell on for content similar to this. We'll start off by talking about the story in 2020. Obviously, with the pandemic, Asia went into a lockdown. And what happened is North American and European supply chain managers or inventory managers got caught with no inventory. They were running just-in-time inventory systems, meaning that the product was arriving just in time, and then they would be able to put that into their distribution centers and then have that be able to be sold to their customers. Now, with the supply chain broken down at Asia, they weren't able to do so. So kind of that 2020 year transition from just-in-time inventory to just-in-case inventory. So they started ordering a lot. And with that happening, they wanted to make sure that if another lockdown were to happen, they wouldn't run into the same circumstance that they did before where they didn't have any inventory. Now, what did that mean for us? Obviously, we were printing money. We were not being able to spend on services, restaurants, travel. All of our money went towards retail goods. So these boats and ships and supply and demand became broken really at that point because people were ordering, the ships were full, and the carriers started increasing the rates as high as people would accept. And at that point, you really got to think with the rules of supply and demand, they're going to push a price as high as they can if people are going to pay for it. And, that's kind of how the rule works there. So we've seen a little bit of inflation come off of this number. Shipping prices have increased 3 times, 4 times, 5 times what they traditionally cost. And obviously these retailers are adding that price down and the end consumer is paying for it. So that's definitely been a factor of, cost sided inflation. We've talked about that briefly before. But again, just to hammer on this point, the coronavirus was infamous for supply chain disruptions. Who could forget the shortages, price increases, the hoarding that we all went through? And what a lot of, companies have sat down and realized is this the best way to operate moving forward? And kind of getting into that point of, did we see peak globalization in 2019? Now, this article also goes on to highlight a graph, and it shows the global share of GDP, and it's definitely been on a little bit of a downtrend ever since the 08-09. So was this something that was already happening? And I believe the underlying connotation is that companies, Fortune 500 companies, are going to look to regionalize their supply chain. So manufacture goods in which the region they're selling, setting up a manufacturing hub in North America that would service Canada, US, and Mexico, potentially even into the Caribbean. So taking that into consideration, what I want to move on to next is to discuss the current situation in Shanghai, because we're also emulating what we saw back in 2020, because Shanghai has been under a lockdown for 4 weeks already, and it almost seems with their zero COVID policy that it will continue this way for at least another month. I don't have a crystal ball, but this situation today is not getting any better. So we're going to look at one company, rethink, a German maker of zinc construction materials. And he said the logistics challenges make a closed loop unworkable at his Shanghai warehouse and manufacturing facilities. And he expects zero sales during April and possibly May. We need somebody in the warehouse and manufacturing facility to do the work. We need a truck and a driver, and these are two key components. And what we're seeing right now in the Shanghai market is that truck drivers don't want to work. They have to quarantine for 10 days, be away from their family. They're being essentially locked into the cabs of their trucks so that they basically have to go to the bathroom and they have to live within the confines of a small truck for a prolonged period of time. It's not a healthy working condition. China says the ports are open, but we're going to look at some data right now that's kind of showing a little bit of a contra aspect as to what's going on based on what we're hearing in the marketplace. So this graph here shows the ships waiting to load or discharge at Shanghai. The data is coming from the beginning of April, so about a month old now. And we can see it goes into looking from 2017 to 2021, and that's the gray line. 2022 is the red, and the gray line at the bottom is 17 to 21. So just the range. And we can see here that there's over 600 ships that are waiting outside the port, waiting to load. So although China is saying the port is open, we are definitely not seeing the case by what the data is showing. If we go on even further to break down this, give you a little bit of a visual of what's happening, this gives a little bit of a closer picture being from April 28th. And this shows all the dots are ships that are waiting to be loaded. And without trucks bringing the goods to the port, there's no functionality there. So the port can be open all at once. The port workers are definitely on site 24/7. They're living there, they're sleeping there, they're eating there. It's not a pretty situation right now. But this just shows you a magnitude of just how many ships are waiting there. And I guess going back to what the original problem that we saw back in 2020 is that, when China did open up and that we started loading again, then we saw a mass load of ships start going to LA Long Beach, going into these West Coast ports, and then they became congested. So what we're basically trying to state here is that there's no fluidity throughout the supply chain, and we will continue to see an upwards trend of pricing. How much higher can they go? I don't know, but the prices will definitely stay inflated for a long time. So that obviously continues this inflation conversation and almost becomes a little bit sticky over the next couple of years until this takes to sort itself out. So that is definitely something to take into consideration as to what companies may be thinking in regards to where their supply chains are going to be in the future. But on the short run, we'll continue to see elevated prices, but potentially peak globalization. So as we move on, I actually found an article which supports the fact that supply chains are easing, and I figured I'd bring that up to show both sides of the story. So this is coming out of Yang Ming. It's a Taiwan-based ocean carrier, so actually the company that would carry the containers from port to port. And they're saying that the waiting time for ships at Shanghai ports is 2 or 3 days compared to the 10 to 14 at US ports. I think this is a good sign that port congestion is easing, said Chang, and we foresee in the second half everything will become smooth. All the difficulties will be easier. Well, this is kind of not what we're seeing based on the data and the number of container ships that are actually waiting outside Shanghai to be loaded. So I don't understand completely where this point of view is coming from. The carrier is seeing a little bit of easing of problems moving forward into the second half of 2022. But, I guess where the whole point of the video is, not only are we seeing a trend in the long run for these Fortune 500 companies to regionalize their supply chains, on a short end stick of it, I guess when we're hearing things about, the economy being a little bit weak right now in the short run, we really want to determine where we're at on a retail spend basis. But we can't see the fluidity of demand of how many purchases are happening in China for goods, because there's nothing that's really moving. And if nothing really moves to the end of May, we're going to start heading into peak season. This is where companies start to ramp up for beginning of school in September or even Christmas time. And I found another article that shows a couple companies right now are already making orders for their Christmas season, which is completely unusual. And we can see here how bad are supply chains. So bad that companies are already placing holiday orders. This came out at the beginning of April. And we can really see here that these companies are, they had to push through kind of what we discussed about before in the 2020s of not having that inventory. And they said that during that year, the inventory sales ratio was the worst they've seen since 2011. And they said they had to keep up with consumer demand since July 2020 with no time to build inventories. Lululemon, for example, was in an under inventory position for most of the year in 2021 due to the supply chain issues. And then that's changed their ordering policy for 2022. So they're continuing to order, but we don't know until things start coming in to see what the demand is like in North America, which I think is the biggest underlying question right now is how strong is the consumer right now in North America? Or have we already started to see a transgression from buying goods to now buying services, restaurants, travel, etc.? So that is the biggest underlying problem in the supply chain / economic outlook right now, and something that you can't really monitor until stuff starts coming in. So it's definitely super interesting to see that these companies are already planning for December and already getting these orders in so that the manufacturers can be ready. And again, like I said, it's the biggest question of what does demand look like? That demand will be a good indication of what the economy is doing. And really, the forward looking for these companies is potentially a case of peak globalization. We're starting to see a lot of different countries start to work together. Obviously, with the crisis in Ukraine, there will be a lot of other joint unions that'll happen there. So let me know your thoughts. What do you think the underlying economy is doing right now in the U.S.? Do you think we're going through a little bit of a rough period and it's not really being shown because the inventory levels are low and we're waiting for the replenishments of goods from Shanghai, which is definitely one of the busiest ports in the world? But yeah, let me know what your thoughts are down below. I hope you enjoyed the video. If you're still here with me, hit that like button. I hope you all have a great week in the markets. Happy trading.